Good morning. Thank you for joining us today. I know there was lots of options, so we appreciate you taking the time to come listen to our panel. It's going to be, hopefully our goal is today is for you to take at least 2 ideas back to your shop where you can help them set some goals for 2016 on how you can improve some recoveries and generate some additional dollars for your organization. I'm really lucky to be able to work with this panel of experts, and I'm going to let them introduce themselves.
Russell Pickens, VP Asset Remarketing at Santander Chrysler Capital.
I'm Jeremiah Wheeler. I'm the Vice President of Sales for DRN.
Hi, good morning. My name's Ann Holtzman. I'm the Senior Vice President for Claim and Recovery at Allied Solutions.
Good morning, Rhett Chappasella, F&I Express. We do software for car dealers, lenders, and ancillary product providers.
Good morning, I'm Robert Guerrero. I'm the Vice President of Sales for Insurance Auto Auctions.
And don't worry, we'll go through this quickly. Looking at 5 people, you're probably panicking out there. Anyway, we'll get done in time for lunch. Anyway, I appreciate your time again. We're going to start off with Russell Pickens from Santander, and he's going to share with you some of the things that they have implemented within their own shop in increasing the recoveries and reducing the deficiency balances for their customers. So with that, Russell, I will turn it over to you. If you want to sit there or you want to come up here. Okay.
So Santander Consumer USA, we're a full-service technology-driven consumer finance company. Our focus is on consumer lending, third-party servicing, with providing superior customer service. Historically, we focused on non-prime markets. We've established and continued that presence as well as gone into prime market and leasing with our relationship with Chrysler. So we have approximately 4,900 full-time employees, 400 part-time employees, and we've got 900 vendor-based employees across multiple locations in the United States and the Caribbean, servicing over 2 million customers. So our strategy is continue leveraging our efficient, scalable infrastructure and data, continue focus on compliance, transparency, and consumer protection, focus on optimizing the mix of retained assets versus assets sold and service for others as well. Continued presence in prime markets through Chrysler Capital. So on the remarketing side, we're responsible for maximizing recovery and reducing losses on repossessed vehicles, deficiency balances for our customers. So the focus there is to maximize funds simultaneously selling repossessed vehicles at auction, also vehicles at auction through upstream platforms as well. We have a presence in over 50 auctions in the United States with partnerships with ADESA, Manheim, and independent auctions as well. While leveraging our off-lease and repossessed units, we have the opportunity to offer a wide variety of vehicles that brings a diverse buyer base as well. So to maximize value at options, we offer a 7-day mechanical certification guarantee to the dealers. We do a reconditioning our vehicles for safety items as well as value enhancements, marketing efforts with all auction partners to increase lane presence. And by implementing effective policies and procedures, we've been able to incorporate effective cycle times in our liquidation processes. So activities to reduce deficiency balances that we proactively pursue insurance proceeds on damaged, repossessed vehicles at auction, which has been very beneficial with Allied Solutions coming in and helping us with that. We've been doing it for approximately 4 years, generating over $1 million a month in recoveries on that piece. Proactively pursue refunds on unused portions of products included with the contracts, such as warranties, credit life, and other ancillary products. It's an ongoing process. We're currently working with F&I Express as well on the age refund project. It's a multi-million-dollar recovery process that we're working on right now. We've implemented claims programs for diminished values on leases. This is new. It's in its infancy. Hopefully, in the future, we'll be able to talk on that a little bit more as well. This basically is just a walkthrough of how we're doing our insurance recoveries with Allied at our auction base. It basically just comes through and tells you that we've got our collateral was repossessed. Allied Solutions received a notification with the condition report. They have licensed insurance appraisers go out and assess a vehicle. They go in and work with the insurance companies to file a claim on our behalf as well to provide recoveries.
Thank you. Next up, we have Mr. Jeremiah Wheeler.
Hi there, everyone. Thanks for having me today. You know, I will say that the fisherman, Chris Metaxas back here, he took most of my presentation and stole my thunder, so I'll,
He's the boss, right?
yeah, he's the boss, so he can do that. What I want to talk to everyone today about is try to spark some new ideas and maybe some additional ideas around using vehicle location data and intelligence to increase recoveries, reduce charge-offs, you know, all the benefits and things that we talk about on a daily basis and what we deal with. And in doing so, kind of tell you a little bit about what drives DRN and the fact that, you know, LPR technology is getting bigger and bigger. We're collecting more and more data every day. And what is vehicle location data? Well, it's, you know, a few data points, including the plate, the date and time, along with the GPS coordinates of that vehicle, some images of that vehicle, and then also some address information. And, you know, how can that be helpful to you and you know, in the scale of finding people faster, reducing your days to repo, and increasing, you know, the recoveries overall. So how much data, you know, are we collecting out there, and how can it make a difference in what you do every day? Well, we have 4 billion plus sightings out there right now. We're collecting about 100 million plate sightings a month. We have nationwide coverage and over 300 markets, and our data is responsible for over 200,000 recoveries to date since inception of the company. Just to go through a quick list of our products, I know Chris kind of touched on a few of them. Location alerts, having the ability to know where your customer is real time. Also knowing, you know, a historical pattern of the last 12 months is very important to helping to assign better addresses and locate the assets faster. Using the 100 million plate scans per month that we're collecting right now, we're able to help you determine which address is the cleanest, the best, and the most likely to return your asset faster. And we do that with our address scoring product. And then, you know, on top of that, basically having the insights for if you have all bad addresses on your account, then we have some location data that you may need that is also can be, you know, scored and rank ordered with your other information to say, let's bubble up to the top the best address for your agents to run, or maybe even for your collectors to call. So you may be able to, you know, collect some additional payments in there. And then there's some other products that they layer in across your entire portfolio and help you manage risk and identify risk earlier in the cycle, and maybe find your asset that may be located in an impound, has been reported stolen, or it's in a container set to be shipped out of the country and sold. You know, it's a fraudulent purchase, and they're going to ship it out of the country and sell it. And then we have, you know, another product, active duty alerts, which helps you with the SCRA, active duty military scrubs. You know, that's really, really important, especially if you're wanting to mitigate your risk and exposure to the CFPB. We can help you with that and, you know, reduce some of your manual labor cost around that. And so what does that look like from an overall, you know, everything that I've just gone through? It's basically taking your, you know, proactive approach, getting actionable intelligence, managing the risk across your entire portfolio, and looking at your recovery strategies around how can I switch to an ROI-based strategy and, you know, increase my recoveries while decreasing, you know, charge-offs, because that's the most important thing for all of us to think about here. And so quickly, we did a pretty unique lender study here with a very large auto lender out there, a top 5 lender, and we looked at their charge-offs for the past 24 months. We took all the account data that they had, including addresses that they had assigned, and then we layered in our location data, and we retroactively looked back and said, how many times could we have helped you recover that unit or locate that customer or get in contact with that customer prior to the vehicle charging off? And what we found was, you know, we had a 60% hit rate on 4,093 VINs, which we were able to plate, which resulted in, you know, 2,457 cited vehicles. And we were also able, more importantly, to tell them that we have DRN-derived locations, which is a cluster of multiple sightings within a very tight cluster around a particular address. And we have 610 additional addresses that you could have on those accounts to locate those assets. What does that mean over a 24-month time period with all of those assets that did charge off? Is we could have helped them find 458 of those vehicles, which would have equated to $9.1 million in avoided charge-offs. And that's, 19 or 20 a month is a pretty big number. So keeping that in mind, what your revenue opportunities are out there to increase your repo rates, reduce your days to repo, reducing close fees if you pay close fees, reducing skip fees so that you're finding them earlier in cycle, you're reducing those fees, and then reducing charge-offs, obviously. And so even, your distressed assets that are already charged off and you have a large pool of those warehouse accounts, we can help you find those as well. And so thank you for having me. Appreciate it.
And now we have Ann Holtzman with Allied Solutions, and she's going to talk about some opportunities within the insurance recoveries.
Thanks, Becky. And thank you all for coming today. So just a little bit about me that's important, because when I start talking about this, you'll wonder why in the heck is there somebody in the auto finance business sitting up here talking about insurance. And so let me give you a little bit of my background. I've been with Allied Solutions for 7 years. I run our risk mitigation, recovery, and claim operation. Solely, initially, only ran our insurance P&C claim operation. We do force-placed insurance, blanket insurance, and insurance tracking on about 10.5 million auto loans, about 1.5 million mortgages across the country for all sizes of lenders. And I was initially brought in for claims because prior to Allied Solutions, I spent 20 years in the property and casualty insurance industry with those companies that you have known to grow and love. I started honestly as a claim adjuster trainee at Allstate Insurance in 1987, directly out of college. And I adjusted property and auto claims, the same claims that you all deal with day in and day out if you're a lender with insurance companies. And I then spent time with commercial carriers like Travelers in the Hartford. And prior to coming to Allied Solutions, I ran a 20-state, 350-person claim service center for auto insurance. And so what I really want to talk to you about today is how insurance companies view financial institutions, lenders, and the folks that service those particular financial institutions. First of all, you do not rate when it comes to an insurance carrier. Their number one concern is the consumer, who is your borrower, and they are not concerned with the fact that the borrower has not paid you. So understand from their perspective that your borrower is their insured. That's the person they owe the money to in their own minds, even though you're listed as a lien holder on the contract. So the most important thing and option that you have as a lender is to ensure in all cases that you are a listed lien holder on that insurance policy. If you're not, they are not contracted to pay you anything when it comes to any sort of insurance recoveries. Today, what I'd like to talk to you about is how you can work with those carriers on repossessions, on impound and abandoned units, on repairable vehicles, total loss units, and finally, the indirect gap product that you all probably have to deal with when you have a total loss and then have to pursue a gap claim on top of it. My goal today is to kind of pull the curtain back and give you some tips of the trade on how insurance carriers think and how you might be able to optimize this recovery. Let's start with repossessed collateral. Once you prove that you have taken full ownership of that collateral through a repossession, the insurance company will deal with you directly, but you will have to provide that proof. 50 to 60% of the time, every piece of collateral that you repossess will have enough physical damage on it that it qualifies for an insurance claim. The average recovery that we're seeing from our subprime clients is about $2,600 per unit repossessed. So take your number of repossessions, multiply that by $2,600, and that's the amount of insurance recovery that you're missing today if you are not pursuing insurance recovery on repossessed collateral. And there's a lot of lenders who aren't doing that today because it's a cumbersome process and they don't like to negotiate with the insurance companies, and they find out that negotiating with insurance companies is a real pain. Damage will normally be 3 times the amount of any condition report damage that you get from an auction. The reason why that occurs is because insurance companies owe you the retail amount of the insurance estimate. That is normally 3 times higher than any amount of repair that gets done at an auction site. So if you have a dent the size of your hand on any quarter panel of a vehicle, that's a $1,500 insurance claim. So scratches, any sort of physical damage where you've got the dent bigger than a fist. Look at any dents or indentations in the bumpers of the vehicle. Glass damage has no deductible that applies to it in a majority of all states for insurance. So any glass damage that exceeds $500 retail, which would be replacing a window, replacing a windshield, should all be pursued via insurance recovery. So just note that you may not think it's a lot of damage as you're repossessing cars, but think about the fact that if I look at my condition reports today and multiply that by 3 on every unit I repossess, there's a real opportunity for you to get some recoveries there. In addition to that, you offset what you're going to send as a deficiency balance collection for that consumer. And you can collect from an insurance carrier and not a consumer. And believe me, that's a lot better place to collect from because there aren't near the regulations that you have from collecting from a consumer. In our experience, impound units is another area where we see a lot of opportunity in insurance recoveries. The way the insurance cycle works is your consumer will be involved in an accident. They cannot pay their deductible or they don't have enough money to fund the repair, so they won't do the repairs on the vehicle. They then figure out that the insurance doesn't mean much to them, so they drop it. And then the next thing you know, that vehicle is either repossessed or impounded, or it's abandoned somewhere. So the damage that occurred on that vehicle occurred at the time that the insurance policy was still valid. So as you look at impounded vehicles, some of the keys here are, number 1, ensure you've got the right scripting to make sure that you understand the damage on the vehicles. Because the more you understand it, the more ability you have to control what happens with a recovery on that vehicle. Second of all, inspect them, or at least a portion of them. To be truthful with you guys, working in the insurance industry and dealing with tow lots day in and day out for 20 years, they honestly know the folks that are going to inspect or not inspect vehicles. They don't always tell you the truth, because if they can get a lien on a vehicle that isn't damaged and sell it to their brother Bob, they just made a huge amount of money by having that vehicle at their lot. Third, use licensed auto appraisers. When you go out to do vehicle inspections at tow lots, in all of our states, through all of the regulations, licensed auto appraisers are required to be able to be allowed on the lot. So if you're using just an inspection firm and not a licensed auto appraiser, they don't have to allow them on the lot, which means you're not getting good pictures of that car or the ability to make any good decisions about what to do with it. 2 of every 10 vehicles that you all get as either an abandon or an impound will have insurance on it with an average recovery of $6,400 per vehicle. So if you are not pursuing insurance recoveries on vehicles that are impounded or abandoned, you might want to take a second look at your program. Repairable vehicles. How many times as a lender have you repossessed a piece of collateral and figured out that they filed an insurance claim, got a check from the insurance company, and you as the lien holder were never protected? There's a threshold for insurance companies, and I know it because I sat on the boards that made decisions as to what we were going to do. It's very simple. It's somewhere between $3,500 and $5,000. Well, they will run the risk of not protecting you, the financial institution, on the claim that they pay to your borrower as a repairable vehicle. You'll then repossess it, find out your borrower got a check, and you were never included. Number one, the carrier owes that to you a second time. If they did not protect your interest and you were listed as a lien holder, they have to pay the claim a second time. So if you're not pursuing those, I encourage you to. And it's a slam dunk, guys. It's regulated by the Departments of Insurance, and every carrier out there knows if they didn't protect the lien holder and now the car's in the lien holder's possession, they owe you the same amount as they paid your borrower where they didn't protect you. So don't let them tell you any different. In addition to that, if they're asking you to sign off on a check for repairs, make sure you have a process that the body shop actually did the repairs and the consumer is honest with you about the fact the repairs got done, and the body shop didn't just sign off on the check, keep a piece of it for themselves and give the rest to the consumer. And that's very simple. The body shops have digital cameras. Have them send you a picture of the fact that the vehicle was actually repaired before you sign that check over to your borrower. Total losses. Treat every total loss as a negotiation because insurance carriers do. So I ran total loss units for over 15 years. Every total loss claim is a negotiable claim. So when they call you and say, I want to give you $6,400 as the actual cash value for this vehicle, and will you please send me a letter of guarantee? You want to make sure that $6,400 is what they should actually be paying. How do you do that? Well, there's a number of valuation tools out there in the marketplace that you can use. You can manage it against NADA Clean Retail because that's what insurance companies owe. And if they're not giving you enough according to your records, negotiate it with them. They will negotiate with you for up to 10 to 15% of that total loss value. So don't just agree to hand over that letter of guarantee for a check because you can ferret out additional dollars by making sure they're paying the right amount on each vehicle. And there's also services out there that can be done where they can review the estimate for the valuation methodologies used by insurance carriers, and it's done at $35 to $40 an estimate. Your return will be $200 to $250 more for every total loss settlement. So it's probably, in that ROI discussion, worth doing. And then finally, GAAP, I'm going to go very quickly here. What we've seen in our best practices reviews as we go in and look at the insurance practices inside of financial institutions when they're kind enough to allow us insurance nerds to come in and take a look, is that your folks are dealing with a lot of issues around GAAP collection, meaning I need a police report, I need a borrower statement, you didn't inspect the car, I need this, I need that. I encourage you to look at your GAAP waivers, understand the language and your rights as a lien holder under that policy, and pursue your GAAP claims very aggressively. If you are not being paid on 85% to 90% of the GAAP claims that you're pursuing on total losses, you need to take a good look at why your people are struggling in getting those recoveries, and if necessary, outsource some of those escalated issues to an insurance provider to help you with those recoveries. In the subprime industry, we're seeing it run 30 to 40% rates in which you guys are not being paid on indirect GAAP today. And we really encourage you and want you to know that the going rate on that should be somewhere between 10 and 15%. Any other questions about insurance? I'll be available after the panel. Thank you.
Thank you, Ann. Next on to Rich.
Thank you, Becky. I come to these conferences and hear from about the CFPB and all these regulators, how bad we are. That's a bunch of bunk. And I want to talk to you about one initiative that a number of lenders are working on right now in the area of ancillary products. So ancillary products have come under more and more scrutiny to the extent of pricing of these products, to the extent of the utility of some of these products. But I can tell you the cancellation process that people are moving to is very, very consumer friendly and something that we should all be proud of. So I'm going to talk a little bit about that. There's about 40 million of these things sold every year by dealers, all different types of products. GAP, you might be familiar with, of course, service contracts, appearance protection, so on. About 20 of those million are cancelable products. 5 million of these products, and most of them you fund as part of your deal. They come in, meet your underwriting guideline, you buy the deal, now you finance these products. So 5 million of those are canceled every year. So it's a high volume of activity. There's more than 200 different companies in the United States that sell these products. And dealers choose who they do business with to sell these products. There's really, for the most part, no transparency in terms of a lender on who the dealer's doing business with. You get $3,000 on a line 5, that comes in, and if it meets your criteria, you buy it. You don't even know what company that is. So that's one of the big challenges in this aspect of the market, is there's no transparency that takes place. Today, finance sources rely on dealers to process cancellations. So in the event that there's a repossession, a total loss, an early payoff, that triggers a cancellation activity that needs to occur. Well, you call up the dealer, you send the dealer a letter, they say pound salt. I'm not going to pay you, right? So it's not a high priority in general. I'm not saying that about every dealer. It's not a high priority because they don't like chargebacks and they don't like paperwork. So that's a big challenge that you face, is going through and having the dealer fulfill these cancellations that you're obligated to execute. So that's a problem. Finance sources lack the tools to do this very effectively. Again, it's really trying to drive everything through the dealership, which causes delays in the process. Sometimes it can cause dealer satisfaction concerns if you have a big receivable for these dealers for your cancellations. Finally, regulators, as we all know, they worked on reserve in the beginning. More and more they're going to ancillary products, and it's only going to be more scrutiny on this particular aspect of the business. So the end result of that is it takes a long time to get your money back, the consumer's money, really what it is, in the situation of a payoff or applied to a deficiency balance in the case of a repossession. Here's the eye chart. Here's a partial list of everyone in the United States that sells these products, okay? And this is a partial list. So you can see, with respect to transparency, it's a difficult challenge to solve for a lender. So more and more what we're seeing is keeping the dealer involved in the process, but providing tools to the finance source so they can file and transmit these cancellation requests directly to these product providers. Because the product providers are the ones that are going to, number one, acknowledge that there was a contract, an ancillary contract for this vehicle and this customer. Number two, they're going to determine the amount of the refund that's due to the lien holder. And third, issue the funds either to the dealer, flowing back to you, or directly to you as the lien holder. So what does this do? There's no delays by pushing everything back to the dealer. There's no work for your group. I'm sure people, finance sources, have this challenge. They have a group of people that call dealers all day and all night long saying, where's my money? So that's a large impediment that you get. More and more regulators are saying these refunds need to be issued to consumers, and it needs to be issued within 45 days. Otherwise, you have a problem, and you have to account for that. And if you look at the CFPB examination manual, Auto Finance Examination Manual, on page 42, and I've come to learn this going through this process here. On page 42, they specifically ask, what are you doing with add-on products and to expedite the cancellation of these products? So it's a specific audit item in the CFPB manual to raise a question and to do research and make you as a finance source accountable for. We did a couple of case studies with two of our lender customers. Here you can see some numbers. What we have on the left-hand side, we have two series here, and this is when finance sources have the tools to be able to file these cancellations directly to Allstate and CNA and all of these providers. You can see the increase in recoveries within 30 days and within 60 days. So these are markedly higher because dealers are a delay in the process. Sometimes dealers don't process these cancellations until the end of the month. Sometimes they lose the paperwork request. So there's a lot of different reasons why it takes long to recover this. But providing transparency to give you the tools to be able to file directly, you're eliminating that entire delay in that aspect of the process, as well as a failure point that might exist. So from a collection time factor, as well as just the volume of recoveries, there's a dramatic impact, number one. And then number two, some of the lenders we work with have backlogs of accounts. So they've acquired portfolios, they haven't had the resources to allocate to this particular activity. So in numerous cases, they'll have hundreds or thousands of accounts that they just charged off and never really had the capability to go out and pursue refunds on behalf of themselves and their customers. What we find in these product providers, there's a lot of them out there, but for the most part, they want to maintain good relations with finance sources because they realize without people like you financing these products, they're out of business. So for the most part, the good ones want to do good things for consumers and for you. So what that means is in many cases, even though a cancellation might not be valid because of the date and the old date, they'll still honor that and they'll still send you money. So we've had customers that have filed them that were originated in 2008, and they're still able to get money back on those cancellations just because these providers want to make nice with their finance sources. Here's another measurement that took place in terms of recovery rates, normally 30, 60, 90 days. They get measured, these types of things. You can see we did a champion challenge here, and you can see it went from 45 to 65% of the recovery, which of the number that was estimated to come in. You can see the time frame, and the time frame is particularly important because these legislators are tying it, and in most cases, it's 45 days. That's a magic number in which these refunds have to be acquired and posted to the account or refunded to the consumer. And the ROIs start to get, pretty ridiculous in terms of these types of initiatives. One of the things I mentioned, and Chris went through a lot of it today, is we have a consortium. There's a group of auto finance sourcers that understand that this is important. They understand that increasing scrutiny is going to come into this area. So they're banding together to approach these product providers and say, look, you are our partners together with our dealers. We're being compelled by these state legislatures and the CFPB to improve this process. We expect you, as a good partner of ours, to help us achieve these compliance requirements. So specifically what they're looking for is data exchange. So instead of sending faxes and letters and phone calls, to be able to immediately transfer the data to send the cancellation request to Allstate's computer so they can instantly validate that and issue a refund. So to eliminate the process of going through the dealership, keep them involved in the process, but directly transmit the information to accelerate the process. Another objective of this is the forms. So to get electronic copies of all of these forms, and there's thousands of them that are used in the marketplace. Most of the lenders that I've spoken to want a library to be able to go in. So I want to see the Allstate GAP form in Iowa that was in force on May 1st, 2011. They don't get the information now because the loan packages come in and they only get the front page of it. They don't get the back page. Okay, so all of the rules, all the cancellation fees, the calculation of the refunds, they don't know what they are. Again, it's a lack of transparency that they don't get that information and they can't manage the business to the extent they want to. And the third piece, historically, the payments that are done, the providers will send their portion of the refund to the dealer, and then the dealer remits on that money together with their unearned commission to you. Okay, and again, that's a very lengthy process to do that. Some dealers are recalcitrant in this process of not doing this in a vigilant fashion. So what the group also wants to do is promote changing the payment practices so the entire refunds go to the lien holder and then the dealer gets charged back in the process. So there's a group of lenders that have come together approaching these providers. There's 20 providers in the United States that are responsible for 80% of these products, so you have an 80-20 rule. So it's not an insurmountable task to go and do this on behalf of lenders and their consumer customers. Here you can see some of the metrics that are measured. I mean, I think they're fairly self-explanatory. Even dealers are not removed from the responsibility, the financial responsibility, but at least you're alleviating the paperwork burden. So they don't have to file a form or log into a website and request a cancellation. That's all done automatically. So there is some dealer satisfaction pickup in this whole process as well. On the payoffs here, that's more and more important. We talked about Wall Street Journal, New York Times, and wanting to get a hold of this. But in terms of payoffs, early payoffs, make sure Granny gets her money. She paid off, she has a gap on there, and nobody wants to show up that, hey, Granny's not getting all the money that she's entitled to. So nobody wants that to happen. And with that, sorry, I went too long.
You're good.
I'll
Thank you.
speed it up. I'm the
Yeah, we're
buffer
going to let
between
Robert
lunch.
speed it up here, so.
Yeah, no, I'm the buffer between lunch. I'm not going to sit here and do a ton of IA infomercials. You guys, a lot of you know who we are. We're part of the car auction family, 170 auctions across the U.S. Today, when they gave us a subject about talking about maximizing recoveries, the auction companies have really had to, as the industry's become more data-driven the last real decade, 5 years to a decade, the auction companies have had to change with it, right? There's a lot of pressure on you as the remarketers to grind down to find every dollar. And as your auction partners, which is what we are, we've had to turn around and do the same thing on our end. So how can we create new levels of services? What can we do different to make our folks successful? And that's really kind of what I was going to talk to you about today. And what I'm talking about is going to be actually very simple, but I can tell you there's a lot of you not doing it that should do it. What I'm going to talk about is our what we call our A-band program. Abandonments are kind of an ugly word in the industry, right? What we do is we use a different levels of the business. So we've got a single point of contact in Clinton, Maine, which is what we call our National Remarketing Center, right? We have our buyer base from over 110 different countries that bid live and online at our auctions. We have with 170 locations, we can minimize some freight costs. So what we do is we take all of those strategic assets and we've created a service where we want to review your write-offs. Right before whether it's through your marketing side or an impound team, or you're such a small org, you have one person kind of handling everything. We want to review that file before you hit the button and write it off. And I'll give you an example. We have had a few finance companies. This is a baby service. I'm telling you, it's very new. We have created a formula where we are able to use our network to get into those storage facilities, work with those impound yards, where you can't get there because you're calling and you're ABC Bank and they know they can get you. Guess what? I've already been there that day, and I've probably already picked up 7 insurance cars for Progressive, Geico, and State Farm. So we have a network in relationships where they're going to make you jump through every hoop to pay them. My guys can walk in there and turn around and pay for bulk and say, we'll pay you tomorrow. I mean, we have that kind of relationship with some of those folks. So here's how it works. What we do is when your team or your person is about to hit the write-off button, we create a process between your org where we send it to our National Remarketing Center. That single point of contact group will then review the file and turn around and make a recommendation. We don't pick up every car, right? So out of the vehicles that we have reviewed, we have picked up about 64% of the cars. The key stat there is out of the 64% of the cars that we've picked up for our customers, 97% have made money. This past year, we won the Award of Excellence for Capital One. We made them $1.5 million of newfound money by taking files that were about to get written off and put in an extra set of eyes with an extra set of skill set of knowing, hey, there's an F-250. I'll just give you one quick example. There was an F-250 in this one market outside of LA. They were letting it go. It had $5,400 in fees. They said there's no way that truck is going to bring that at the auction. We reviewed that file and we said, we recommend you picking it up. They didn't want to do it. We said, pick it up. If it doesn't do it, we'll buy it. We'll pay you out. Car comes in, truck comes in, brings almost $9,000, and we turn around. They're like, I'm sold. From that point on, we've gotten 100% of their business there, and we continue to make them money every week. There's those kind of stories that have really taken off. Now we've got more finance companies on it. Now we just landed one of the largest dealer groups that's doing buy here, pay here in the country. And we're in the process right now of lining out the details of getting them connected with the NRC to make sure that we've got them lined out of what we're going to do. But we're about to do their write-offs and impounds across the country. So it's a new service that we offer. You know, a lot of times the auctions sit up here and we want cars, right? So we're going to come up here and hit you for cars. This is a little more targeted. This is a little bit different approach, and that we know that it's a small portion of the business, but this is, you heard Chris saying, loss, reduce loss, reduce loss. This one right here reduces loss. So I know I'm in between lunch, so I'll just really finish up on that. You know, we think that we have all the different elements put. There's no magic pill to this, right? So everything's a little bit different, and the car doesn't always. This repo isn't always in Dallas and is easy to fix and clean and gets to the auction. You know, this stuff happens in Knoxville, and you find them in Longview, Texas, and you find stuff in areas that those are your biggest losses, where you're not set up to manage because your remarketing folks are put in your key areas. Well, guess what? You're going to find this in Lubbock. You're going to have a truck that you're going to lose $6,000 or $7,000 on in Lubbock, and guess what? We can help you with those. You know, and speeding it up, that's really what I got.
Okay, great.
So, I mean, Gil Hyder's here. He leads my A-band program for me. We have a booth. You can stop by and say hello if you have any questions. I'm done.
Great, good. Well, thank you, everybody. We went a little bit over, but we appreciate it. Hopefully, you could take a couple of ideas back to your shops. And if you have any questions of the panel, they'll be out and wandering around today, so feel free to come up and talk to them. Thank you.
Please give this panel a round of applause. Thank you so much, everyone.